pleasure of introducing our ultimate speaker, Milady Marinda Short. Marinda Short is the CEO of Consumer Profile Bureau.
For those of you that is involved in the banking sector, which I think, and financial sector, probably all of you have heard about the Department of Home Affairs debacle that is currently going on. So we have been fighting fires, we have been trying to get industry to breathe, and we're trying to keep Minister Leon Schreiber and Kuhn from Time Bank to just breathe each other. But I think that's the disruption and the challenges that comes across our road, and we all thought it was going to go away, but it's here, and we need to find ways to make that work. My board always calls me Mrs. Compliance, and for a very good reason, that where we operate, and if we look at how many data breaches there's been in the last 3-4 years, every single person here in this room's data is out there on the dark web. So every person's data that is normally used to onboard in a non-face-to-face environment where you don't have a photo available with a Home Affairs link, you've got the challenge to now become part of this fraught world that we all live in. And who of you have checked your own credit report in the last month? Okay, so the rest of you, there's a very good chance that you've got accounts in your name that you're not aware of, so please go check it. If you check it on CPB, you can check it every day for free. We never charge you. www.myfreecreditreport.co.za. You will be onboarded there, but you can check it every day. I think it's important that we need to be in control of our own data, and we need to understand our own credit reports. If we do that, we can understand the market. So welcome and thank you for the opportunity to share a vision for Africa's financial sector in 2030. Today we explore what it means to create an exclusive, smart and resilient financial ecosystem backed by practical experience, regular insights and proven innovation across South Africa and the continent. It was very interesting, one of the previous speakers said 700 million Africans do not have a smartphone. And knowing these facts, what can we do and how can we collaborate to actually bring them into this financial ecosystem? So if we look at Africa's FinTech momentum, the opportunity, every time I go and there's a challenge like the Home Affairs we currently have, or we get a new budget speech, I always try and find the opportunity in that, because we can't change the situation we're in. There's certain things we just get thrown at us, like the Home Affairs with a 6,500% increase into a system that's absolutely unstable. But we still need to operate. Our businesses still need to operate. So where do we find the opportunity in that, rather than trying to fight in a social media environment? Maybe we need those too, but how do we find that opportunity? So Africa is not catching up, it's actually leapfrogging. The youthful demographics and the mobile-first behavior create huge opportunities for us. FinTech is now a driver of inclusion and economic infrastructure, and not just innovation. The shift that comes from products to ecosystems, we're moving beyond transactional products. True adoption happens when services integrate into how people live and work. This is why customer-centric ecosystems like Lesaka's, I like to use them as an example, are succeeding where our legacy systems lag. If we look at a traditional credit bureau, 40% of the expenses of a consumer sits in a traditional credit bureau environment. Yet a lot of us are still using that data to make decisions. So identifying that missing 60% that's there and trying to bring that into the environment, look at behavior, look at shopping patterns. How do we bring that in? Because bad decisions are made because you don't have data and insights. And how do we bring that in? I'm a big promoter of working with government, working with them in the challenges and the solutions that they have. If we look at the lessons from a digital-first banks, Time Bank and Discovery Bank in South Africa, they succeeded by getting onboarding right. CPB was there from the inception, enabling real-time KYC and proof-of-address solutions tailored to the South African environment. This shows the importance of the right infrastructure partners. If we look at 1 October 2017, when the FICA Act changed, and for the first time it made customer onboarding and KYC solutions possible by using data, third-party data sets, and not just a rates account. How many of us, I saw something on social media today in a Capitec Bank row to be onboarded, and the guy had his wheelie bin with his number painted on there, and he was actually standing in the queue because this is proof of address. So we understand the market, we understand the challenges that we have. How do we optimize the information that's out there? If I look at just the stats that came out from Home Affairs, there's 20 million, a minimum of 20 million biometric inquiries pushed through to DHA on a monthly basis. If you look at credit inquiries, depending on, if you look at other inquiries, telcos and normal credit inquiries, it can be anything to 100 million that's run. We're sitting with a 25 million credit consumer data set on a bureau, of which effectively only 18 million of them are really credit active. And of that 18 million, 10 million is actually on average 3 months and more in arrears. So we're sitting with an 8 million pool in South Africa. If we look at our what we call the short-term insurance base, about 3.6 million consumers in South Africa that owns a car or house that has some sort of insurance. So how do we scale our products and solutions to get those included? I was actually in the hospital a while ago, got bored and started chatting with the nurses, and I'm giving them lessons. And on average, what I found, they told me that they have 3 to 5 funeral policies with a stokvel, and then they're trying to manage it. And I'm like, why? But it's almost a requirement in the communities where they live that to respect a mother that passes away, you have to have a big funeral. But understanding these nuances and understanding the market we're trying to save, we need the data so that we can properly actually guide them. Do we just sell them another policy, number 6, or do we actually consolidate what they have? You only need X, why do you pay so much, and how many people are paying for the one funeral? So understanding that. If we look at, why does digital onboarding still matters? The entry point to financial inclusion is identity. If we can't verify people securely and quickly, they remain locked out. But we must manage this responsibly, balancing customer ease with regulatory and fraud controls. If we look at, I think, Time Bank, we looked at the other day on how many inquiries was actually done on a unique ID through our system. We've been involved with them from day one. I think we're sitting on about 14 million unique IDs that was brought in. If we take that and we overlay it with one of the leading online gaming platforms, it's actually scary how many people are on there registered, and you can see them coming on monthly. They get a SASSA grant, but they're not financially included in South Africa. Those people transact with cash, and how do we understand that? How do we get that information in? The challenges in onboarding, if we look at the South African context, so our DHA challenge, it was previously 15 cents a record to access biometric photos or fingerprints. It's gone up to 10 Rand a record. It's 6,500% increase. If we look at the banks, some of the major banks, and they were quite clever in how they positioned this increase. It was with the banking fees audit that was done. The major banks can afford that. They can absorb it, and they will somehow absorb some of it and pass some through. But your microfinance and your retailer and furniture sector, they don't make money from the credit that they grant. They make money from the shirt and the table, and they don't have that available. So what is happening? These consumers are now excluded from those credit, and the bigger banks can actually get that. The consumer, your microlender's appetite for risk is bigger than another bank. They also know their communities. They're now trying to be compliant in terms of the NCR and POPI, and what is going to happen with the consumer? He's going to end up with a machinista because he cannot get this through, and he cannot pay that application process fee. Just the identity verification is 10 Rand without any profit. Then you got to do your PIPS watch list sanction screening, because a microfinance here, the credit provider is an accountable institution. They have to check that. And so what is the onboarding cost? So South Africa, the eKYC relies heavily on Department of Home Affairs, which is critical but also costly and difficult to access consistently. This creates tension between enabling services and managing compliance cost, especially for startups. Somebody asked me yesterday, so how many, and if we look at how many inquiries is just going through to Home Affairs and how many inquiries has gone through for AML, PIPS, checks list, bank account verifications, the pool of data we have, where consumers have successfully been onboarded with certain rule sets, why don't we start looking at a KYC consumer data set that we start working together as an industry, but each sitting in our little corner, and we want to hold onto our data. The data of the consumer belongs to the consumer, does not belong to us, and we need to bring them into this whole solution. The future is not adversarial, it is co-creation. At CPB, we work with regulators, the FinTechs and the banks to build compliant, scalable and inclusive services. The same applies across Africa. We must work together to shift the system. If I look at Vision 2030, Pillar 1 is inclusion by design. We can't add inclusion later. It has to be built into the design from day one. That means understanding township economies, gig work, shared services, and cash-heavy environments. Digital inclusion must be intentional. If we look at Pillar 2, smart infrastructure. Smart infrastructure means agility and trust. APIs and interoperable platforms allow new services to plug into existing rails. Business as a service is changing the cost of service delivery, but all must still be secure, scalable, and locally relevant. If we look at Pillar 3, resilience through regulation. Innovation must be met with adaptive oversight. South Africa is leading in this space with regulatory sandboxes and collaboration. For 2030, we need a harmonized framework that allows cross-border services while managing risk. If we look at the Reserve Bank and the digital identity, where they have just appointed the main players in there, they want to start bringing that digital identity live in South Africa by 2028. What do we do until 2028? We know that it's going to be a starting point, but the adoption, we know, is going to be slow. How are we standing together and building something up until 2028? If we look at a case study, Lesaka on everyday commerce, Lesaka shows what's possible when you design for scale and relevance, whether it's a spaza shop in Kailicha or a major retailer in Cape Town. The same platform serves both because it's built with the end user in mind. A case study in CPB with public sector identity solutions. I don't know if you've followed in the media. On 1st of November 2024, we actually signed a world first where Department of Justice, Social Justice for Families and CPB signed an MOU PPP where we are now going to be aggregating all the maintenance order data in South Africa. There's 3 parts to it. Is there a maintenance order, yes or no? Secondly, how's the payment happening? And thirdly, if there's default judgments. We're kicking off with default judgments. The challenge 2014, 2015, the Maintenance Act and the Credit Act already made provision for this, but never has there been a platform that we can actually get that. They estimate around 80% of kids are growing up with one parent in the home only. So the scale of maintenance orders that's not being paid is putting massive burden on the grants in South Africa. And having data available that we can make these decisions, I think is critical for us. We're not just working with the banks, we're working with government. Our Triple P with Justice to automate the maintenance order proves that when you use data responsibly, public sector outcomes can improve too. Very excited about that. We're waiting for the go-live date. The Minister, Department of Justice Minister, Minister Simelane still signed it in November, but has taken this seriously. And we want to make sure that from there we can get data and insights that we've historically not had available, and we can actually make sure the right people can get the credit that they actually deserve. What leading digital banks are doing globally. Global leaders show us that scale and profitability can coexist with inclusion. Whether it's OakNorth's SME focus or WeBank's ultra-low IT cost, the models are there. We just need to localize them intelligently. Why does Africa need their own models? We must stop copying and start adapting. Africa needs solutions designed for its reality, from SIM card-based onboarding to agent networks and voice interfaces. Context is king. We know that we've got a flawed RICA process. I believe that if we fix the RICA process, and we can bind a person identity to a telephone number and a device, we've got the base for a proper digital identity system. And that could be used then into all the different areas. Innovation is anchored in trust. No matter how advanced the tech, if the users don't trust it, then they won't use it. Trust comes from consistent delivery, clear data practices, and human-centering service. We must build tech that earns it. If we look at the SASSA grant recipients, my mother's brother recently applied for SASSA in Cape Town, and he told me for 2 days in his wheelchair, he had to sit in front of a SASSA office, one day 7 hours, the next day 10 hours. He still could not be onboarded for his SASSA grant. If we look at all the data breaches, I referred to that previously, and Vierko Zai, the students that actually exposed the SASSA grants, very knowledgeable people that also report for GroundUp, has actually proven that the data that was breached in South Africa was the ground base for all the fraud that we had in the SASSA grants. And so the users must trust us that we can have their data and that we will actually protect that data. Otherwise, they're not going to give the data to us. We look at digital identity and the role of government. We need digital identity to scale financial inclusion. Government plays a critical role here. We support policies that make verified ID access easier, not just for banks, but for fintechs, NGOs, and for our citizens. The future is embedded, intelligent, and inclusive. The winners will embed finance into people's lives, anticipate their needs through data, and serve all users with dignity and ease. This is what Vision 2030 must mean for Africa. We must change to get there. We need to connect the dots. That means getting regulators, fintechs, banks, and government into the same room. Data sharing must be safe and smart. Onboarding must be affordable. The platform is as important as the app. Call to action, we need to collaborate to build the future. This is not a solo mission. We need to collaborate, experiment, and co-create. Let's prioritize platforms over one-off products. Let's put the citizen at the center of fintech innovation. Thank you.
As a concluding note, now that we're at the end of our Digital Finance Africa conference, I want to thank you for your presence, engagement, and the powerful ideas from our panelists as well as speakers in the sense of what we've shaped today from a thought point of view. We've explored the shifting terrain of finance, technology, trust, regulation, innovation. It was a lot today, ladies and gents, but I'm sure you will be able to take away some jewels from the interactions and back to what you are doing in your daily lives. Each of you, whether in fintech, banking, policy, cybersecurity, or anything in data, has a role to play in designing a financial ecosystem that is more inclusive, more intelligent, and resilient. So as we all leave here today, I want us to carry a thought with us. Innovation alone won't change the future, but purposeful innovation, backed by collaboration and courage, will certainly. Thank you all.